going from higher time frame to lower time frame to look for entries can be quite confusing if the dots do not connect. In this video, I will show you a new way of top-down analysis that will change how you view the markets. If you're new to the channel, subscribe. I have a free mentorship program. Link will be in the description. Let's jump into the video. But first things first, we analyze the weekly template. We want to know where the market is headed. And how do we do this? We use the weekly cycle. And the weekly cycle is broken down into signal days, which is the failed breakout or the high of week, low of week scenario. So what does that mean? On Monday, as the week is beginning, Monday sets the high and the low of the week. That's a no-brainer. Makes sense. It's a fact. And now once we have Monday's high and Monday's low, then on Tuesday, two things may happen. The first thing is that price might break out of either the low or the high. We'll use the low for now. And then at the end of the day, price comes back into the range and closes inside like that. So this is what we call a failed breakout. So failed breakout at low of week is a signal to buy low next day. So on Wednesday, we would be looking for an opportunity in whatever session you trade to trade from the low of the day back to the high of the day, high of the week, depending on the setup. And it's the same case if price breaks out of the high of the day and closes back inside. That means we have a failed breakout at the high of the week. And if we have the failed breakout at the high of week, it means sell high the next day. Simple. So this is the weekly analysis. Now, price might also on Tuesday. So assuming this is the high on Monday. On Tuesday, price might break out, but when it's time to close, it closes outside of that high. So what this means is that now this is a breakout, not a failed breakout, a breakout. And what we do with breakouts is just we adjust the high of the week and then we wait for price to break out again and close back inside of the range to give us a failed breakout so that we know the direction of the week. So let's look at a couple of examples to see what we are talking about. So we can just choose any random pair and then scroll back. We are looking at the 15-minute time frame. And then we can start, let's even start on March 1st, on 2nd. So Monday sets the high and the low of the week, as you can see here. On Tuesday, we have an inside day. Price does not do anything. On Wednesday, price breaks out and then closes back inside of the range. So now we have a failed breakout. Once we have a failed breakout at the high, it means that we sell the next day. And you can see that we got the massive sell the next day. Now, additional information. So the day that we have a failed breakout, so on this day, on Wednesday, this is called day 1. And we sell on day 2. Now, if day 2 stays within the range and does not break out of the high or the low, then we can continue selling on day 3. And If you want to push the extremes, you can even sell on day 4, so long as price stays within the high and the low of the week. Now you can go back and do your back testing to test this weekly template, weekly cycle. So let's move on to the next step. The next signal is the high and the low of the week. So what does this mean? So for example, let's say we have Monday setting the high of the week. And if we have no signal on Monday, since it's the high of the week, we can also look for an opportunity to sell at the high if a specific pattern forms, which I'll show you in a couple of minutes. So moving on to the next step, which is the daily analysis. Now, on the daily analysis, we use the signal days, especially the failed breakout, to know exactly which day we are trading and what to expect on that trading day. For example, if we look at the Swiss franc, we have Monday setting the high of the week. Tuesday breaks out and closes inside of the high and the low of the week, giving us a failed breakout, which means sell on Wednesday. Now, on Wednesday, price again breaks out of the high of the week. We have the massive sell because of the FOMC, but also it closes as a failed breakout, which tells us to sell high the next day. So today we are waiting for price to come back to this level. We want to sell high, so we want to sell at the high of the day, and then we want to target the low of the day. So we'll use a trade setup we got on US 100 on Tuesday. So first things first is time. Now we don't trade any time of the day. We have specific timing windows. For Asia, it's 8 to 11 p.m. New York time. For London is 2 to 5 a.m. New York time. And for New York is 8 to 11 a.m. New York time. So in this setup, it occurred in the New York session. So step 1 is timing window from 8 to 11 a.m. New York time. Step number 2 is identify the high and the low prior to the session. So let's delete all this, because when you come to the screen, it will be blank. There will be nothing on the screen. So the high of the day is here, and then the low of the day is here. Step number 2. Step number 3 is we wait for the first hour to close. So the first hour is 8 to 9. So let's see what the first hour does. Yes, so the first hour breaks out of the low. So if price breaks out or pins the low in the first hour, what we do is we extend our low to that level, to the new low of the day. Now, we trade only 2 hours a day, from the second hour and the third hour in every timing window. So the next step is we wait for price to come back to the low with a breakout. So we want to see a breakout. What happens? Boom, we have this big breakout. So price breaks out of the low. Once price breaks out of the low of the day, then we want to see a specific pattern. It's called the 1, 2, 3. Now, 1, 2, 3 is very simple. If we are at the low, 1 is down, 2 is up, and then the breakout move. If we are at the high, price is going up, then down, then the breakout move. So you can see this is the complete rotation. This is a 180-degree rotation. So if you've done math, you understand that. Anyway, now once we have this 1, 2, 3, 1, 2, 3. One important note is that number 2 is the 4 bullish candles, and number 2 has to be 2 or more consecutive candles. So 1, 2, 3 breakout. The next candle, if it's bullish, then we have our template. This is the template we use to go back to the high of the day. Now, the next step is confirming that the next candle is in alignment with our thesis, which is bullish. So we go to the 1 minute time frame and observe the price action. Now, as you can see, price is creating higher highs, higher highs. And what I like to do on the 1 minute time frame is that I know most of the time when price is creating higher highs, then it will start creating lower lows as a retracement before starting to continue with the trend. Like, that's the typical price action on any chart, on any pair. So price is creating higher highs. So I just sit and wait for the lower lows to start being created. So price starts creating lower lows, and then we have this W pattern with the breaking structure here. And then we have the pullback, and then we have the engulfment candle. That is our entry. We have our stops right around there, and we are targeting the high of the day. Simple. And then we switch back to the 15-minute time frame, and then we let the market do its thing. So it's very simple, nothing. So it's all pure price action, no indicators. And if you would like to learn more about this strategy, check out the link in the description, the free mentorship program. And if you got value from today's video, subscribe, and I will see you in the next video. Peace out.